Hi everyone and welcome to this webinar today organized by the IMA Austria chapter together with IMA Switzerland chapter. We have a lineup of 4 panelists today, and we're going to talk about crisis management and sustainability in times of inflation and global risk. So we're very pleased to have this event as a hybrid event this time. So we have a few of our IMA members here in Vienna on site, as well as all of you who've signed up for the webinar online from Europe and beyond. So I'll quickly present the 4 panelists today and kick this off. So we have Ekaterina Emelianova, who is CFO of TradexBank in Zurich. We also have with us Hessel Brouwer. He is a finance and controlling head of MIGROS. We have Pascal Peter, who is CFO of ROFIX. And last but definitely not least, we also have Victoria Krammer, who is deputy CFO of BAWAG Group in a banking group here in Austria. So we're gonna go into the discussion now, and I would like to ask prior to that, maybe the panelists can say a few words about themselves to get a feeling about who they are and what they do. Maybe we start with Ekaterina, with you first.
Good morning, good afternoon, good evening, everyone. I'm a CFO with more than 20 years of experience. I've been working with industry, with consulting firms as a CFO, as well as a bankers. And in my professional life, I've been through many crises and many situations. Then things are not like you expect them to do. So I hope I would be able today to share with you a bit of my experience.
Thank you so much.
I think it was my short introduction.
That's great. Victoria, can you say a few words about yourself?
Yeah. Hi, everyone. My name is Victoria Krammer. I'm working for BAWAG PSK, which is one of the biggest banks in Austria. As you already mentioned, I'm with the bank now for 11 years. Been through different departments there on the finance side as well as on the retail side. So I can tell you here something about that. Before that, I was working as a management consultant in Asia and Africa. So there are also a lot of different challenges there, which I can talk about. Yeah, and I look forward to today's discussion.
Great, thank you so much. Pascal, maybe an intro from your side?
Hello, everybody. Today is International Accounting Day, in case you didn't know. So happy International Accounting Day to everybody. My name is Pascal Peter. I work for ROFIX Switzerland. We produce building materials. It's all dry mortar products. So anything you need for bricklaying or making renders on construction sites or street floors. So it's really nuts and bolts industry. I've got a business degree, and after getting this degree, I worked in various managerial accounting roles. During these jobs, I did my CMA. I'm a long time IMA member. I've been on the global board of directors for IMA, and I'm very happy to be here today with you. Thank you.
Right, maybe Hessel, from your side, a quick intro.
Absolutely. So I'm working at MIGROS for the Austrians. This is Switzerland's largest retailer. I'm responsible for finance for a part of our business that manages independently held companies as a portfolio company. So I work with a very interesting, diverse set of companies, a discount chain, a petrol station chain, and also an online an online shop, kind of comparable to Amazon, as you may know. We see that during the different crises, we see the interest of having a portfolio. So some businesses reacting very differently to different kind of crises. So I have to share some inputs on that later during the discussion. Besides, really happy to do this together with Austria. Thanks very much. I'm a board member of the Switzerland chapter and also a global board member of IMA. And I think it's really cool that we join up together and have this international discussion.
Right, thank you so much. So before we kick off the discussion, just real quick, you're going to see 4 polling questions. We are required to have that, so I might add. So we use this to poll the audience on a couple of topics that will be relevant to the discussion today. Yeah, let me start with a question to the panelists, but also push the first question to the audience. We have a little bit of hiccup. Half of the question is cut, but I'll read it for everyone. What do you believe will be the magnitude and effects of the upcoming recession? Are we going to have one? So you have four options to answer. For the audience and for the panelists, my question to everyone is, are we getting a recession? This is on everyone's mind. What are your thoughts on global versus Europe versus in your country, Austria or Switzerland? Maybe Hessel, what do you think?
So I like to be realistic. And even though we had some crises, we have seen actually some really good development over the last 10, 15 years, both in unemployment or in stock markets, GDP growth in Europe kind of flagging but positive. So I expect there to be some serious correction. I expected already for a long time, and I've been wrong for a very long time. So maybe I'm wrong again.
It is also has to do with the fact that if everyone expects a recession, we're likely to get one, and maybe the effects will differ. But let's see what the audience says. I think for this question, we see right away that 40% think that there's going to be severe global downturn with major effects for their company, and no one believes there's going to be no recession, and moderate effects are expected for, I guess, half of the audience thinks the effects are going to be severe and half moderate. Thinking from the banking and energy sector, Ekaterina, what are your thoughts on this?
I think one important point, we have management accountants here. And one of the strengths for the management accountants, we're always trying to prepare our company and business for the worst, because if it's not happened, there is no any drawback. So from that perspective, I'm pleased to see that our audience is preparing. Leaving jokes aside, I think it's inevitable that the recession will come. And I think it would be not an easy time, because we have several crises together. We've been facing for several years logistic crisis or supply chain, which originally started from the COVID. We now have food and energy crisis, which is caused by the war. And from that standpoint of view, from the banking perspective, we think that recession is definitely around the corner. We may debate, will it start already in 2022? Would it be in first quarter of 2023? Or it would be closer to the end of 2023? So from that standpoint of view, bankers are already preparing. We're already changing our models, because the bankers are always looking for the expected loss. And we're trying to change our models to see that if it's a recession, it means that there would be more defaults on the market, so the probability of default will increase. We are preparing, but here I would share the Hessel view. I would love to be wrong. I would love to see that some unexpected event will happen which will stop this thing. But from what we can see, this rally with the rates. Every country is increasing. I think European Union is acting a bit slower than I would expect. From that standpoint of view, USA is usually a bit faster. Hello?
Yeah, we heard that. Thanks so much. Maybe let's take a step back and what was, okay, to reflect on what was the experience, how did everyone experience, just the recent overlapping crisis in the past 2 or 3 years? What were interesting, learnings and effects that you expect or didn't expect to materialize out of those crises? My question goes to Victoria.
As you said, we have like overlapping crises, and it started with Corona, where everything was kind of uncertain. I mean, we know we could expect more losses from the banking side. So here we were definitely prepared, and we built up reserves as we saw it kind of all over the globe. What we didn't expect that it lasts so long. I mean, it's still going on. I'm not sure if we can still say it's a pandemic or it's already over. So that's something which we couldn't anticipate it. So that was also one challenge. It was really hard back then, and it still is, to kind of adjust our models and say, what should we expect for that? So the risk cost was one we could kind of tackle. The other one was we have a lot of retail customers. So we saw it on the payments. So there were like sort of two sides. One is the customer behavior changed. So it was away from cash towards cards. But on the other side, people didn't travel anymore. So that means, at least for us as banks, to have less revenues. So those are kind of two ways on the COVID, which impacted us quite a lot. Concerning the war, I guess that was something where we were kind of cautious in the beginning because we didn't have any exposure on Ukraine and Russia. So we get more hit on the second round effect. So what we now see more or less, the increasing energy prices, the increasing inflation. And here especially we are focusing on retail customers. We stayed quite cautious on our lending criteria to whom we give out loans since the pandemic to don't have too high losses on our books here. So I guess that's still something where we have to remain quite cautious, also going into kind of 2023 with an upcoming recession, because on the one hand side, it's kind of the new customers, what are we taking on our books? And the other thing is what we already have on our books, which means we talked about recession, inflation. What's also what we also have currently increasing interest rates, which is nice for banks, but on the other side for retail customers with the variable loan on their books, it's quite a burden because the interest rates are rising. So they don't only have the increasing kind of energy and food prices, but also the increasing loan costs, which is of course a hassle for them, and where we will see defaults coming around the corner.
So those are very interesting effects that not everything was expected. Maybe Hessel, from what do you think about just this? Obviously the impacts of the previous crisis were different among the industries. From your perspective, retail, fast-moving consumer goods. What was the, maybe, or let me rephrase the question another way, the disruption of the supply chains was probably the main event that you had to deal with, right? Or what were other interesting aspects?
If I go one step back still with the pandemic, there's a lot of interesting effects that you may not expect. So with a very large online shop, clearly during the pandemic within Switzerland, we were big winners simply because people were buying their goods online, and everyone goes to, say, the main shop, which would be Amazon in Germany, and it would be Galaxus in Switzerland. Of course, we had a lot of benefits from that. What we maybe didn't expect is in our discount stores, we have actually a lot of small shops that are close to neighborhoods. So not big shops like Aldi and Lidl, but a bit more closer to the people. And we saw that they were doing very well because people didn't want to go to big shopping malls or want to take public transport to go shopping, but go to this shop close by. And actually, we noticed we profited from that from a large degree. I like what you said before about travel. I mean, we see in our sales when people are traveling or not. When people are traveling and not buying, their goods in our stores. So we also benefit from people staying in Switzerland and also not going over the border. So definitely, the Swiss people will know that there's many people buying in the Euro area because you can buy cheaper there. And during the pandemic, at some stage, you were even not allowed. So now we are really figuring out which of those effects are staying. And actually we see that a lot of people who for the first time made an online purchase, they stay online. So our share of total non-food purchases is actually constantly growing. Of course, it went down after the pandemic, but we stay on a higher level because people like it and they keep on buying online. Likewise, in our discount stores, we see that people, they went to our stores maybe for the first time because we had a reputation for being a bit cheap, and they see, hey, actually those stores are really not that bad, and they keep on going. So really some effects that you might not really expect. This year, within retail supply chain, you see it on certain products. We have a lot to do with inflation, of course. Vendors coming to us, and we challenge them very hard on facts. So, we have a lot of data out there. We have inflation data. We have general surveys on purchase prices. So, we don't let them fool us and just come with unsubstantiated claims. Within the petrol business, I'm going to try to keep this very short, but I think it's a really interesting case also about risk management. So Switzerland is a landlocked country. We don't have a sea, so we don't have our own port, like Netherlands, where all the oil is coming on Rotterdam. A lot of the oil is coming over the Rhine. Another part is coming from a pipeline from Marseille in France, and another large part is coming by train. Now, this year, besides kind of the disruption in the oil market that we all know about, we had a problem of very low water levels in the Rhine. At some stage, ships were going at half or even 20% capacity because they simply couldn't load anymore in the Rhine. And at some stage, we were really close to a point where there would be no more Rhine freight, which basically would take out a big part of our supply. The pipeline is there, no disruption, but the capacity is limited. And on top, the railway, there were rail constructions, there were strikes, and in general, there's a shortage of rail cars because of underinvestment by railways. So basically, besides all the things we know, we had kind of the perfect storm in Switzerland. And there was a short period where Switzerland was using its strategic reserves. And well, if there wouldn't have been rain at the right time, it might have been really tricky within Switzerland. So really interesting case about how risk can all of a sudden come together in kind of a perfect storm. Fortunately, we didn't have any issues that I'm aware of.
Right. So you touched on two things that we're going to talk about also later in this session about, bringing more localization, essentially regional, local stores, local, less travel, but also a kind of the sustainability and climate effects that, play into this whole thing on top, right? With the Rhine, lower levels, etc., and the global risk. To phrase a question to Pascal, the building industry was one of the relatively intact industries over the last overlapping crisis. What was your experience looking back in the past, let's say, 2 years from the industry of building?
My key takeaway is from the first lockdown in Switzerland. Switzerland went into not many lockdowns, but they had one in 2020. And internally, we had the discussion whether we should go on a furlough scheme and get some government aids versus intensifying our efforts on the market and changing the way we work on the market. Our business is very local. It's very people-oriented. So we are on construction sites with planners and architects. And suddenly you couldn't go there. And then there was this discussion, should we go on a furlough scheme or do something else? And we decided for something else. And we really intensified our efforts on the market. We were really quick in setting up video conferencing tools, which we didn't have before because we're like old-fashioned industry. And that really paid off because others went into a furlough scheme. They took off their market presence, and we really could benefit from that. Overall, I have to say that the building market was pretty much intact. We had actually 2 pretty good years. Now it's going to change. I think 2 problems on the horizon. One is interest rates. So people will have to pay much more for the loans. It's one thing. And the other thing is inflation in general, which is going to make the cost of living much more expensive. But if I look at the sustainability bit, that's actually a bit a cause of hope for myself. I'm seeing very intense discussions on the COP27, which is taking place right now in Cairo. And it's really each percentage of a degree matters. So I do hope they will come up with stronger sustainability commitments from all countries, which, if I translate it to the building industry, is actually good news. If cement were a country, it would be the number 3 country as a carbon dioxide emitter, right? And the building industry can actually do a lot to fight climate change. And so I'm a bit positive on that side. And I think companies really need to look at their sustainability strategy and how can they benefit from these climate issues.
That is absolutely critical. In the meantime, I pushed the question to the audience of did they have in place an active crisis management team during the COVID crisis, to take as an example, and how the organization changed, right? So the answers were, I think, already answered, and overwhelmingly, yes, most companies, 58% set up immediately a team, and as a result, major organizational changes were carried out. The second option, 37%, the answers, no specific crisis team, but the management took severe organizational changes and dealt this way, and only 3.4% saw relatively low impact and carried on business as usual. I guess those are the IT people in the industry. We did okay because of digitalization efforts. But the jokes aside, I think everyone had more or less a team set up to deal with this. And now the question that I want to pose to the panelists is, just thinking it from a more, let's say, philosophical perspective, have we been dealing with white swans or black swans the past 2 years? What could one have anticipated for, and what was completely, just exogenous shock, external variable that you can't really figure into your, business continuity plans, into your planning really, and just what are some of the approaches that you took or you think were relevant from purely anticipatory perspective and crisis management organization perspective? Maybe Ekaterina, a question to you.
Thank you. Interesting question. Actually, quite impressed with the answers because I believe the crisis management team should be ready before the crisis knock to your door. And here I think this business continuity management and this type of planning is quite important. In the banking industry, this is required by the regulators, at least here in Switzerland is one of the hottest topics from our regulator. But what I'm trying to say based on what we've seen, here I need to tell you that TradexBank, it's a local Swiss bank since September, but a year ago it was a subsidiary of the Russian bank. And you can imagine how things changed for us when we woke up 5 o'clock in the morning on 24th of February. So what I can tell you, one thing, then you do your scenarios of the crisis. Please make sure that you do really think out of the box. Because if it's a real serious, severe crisis coming, you would be surprised how much new you will learn, and how basic things what you consider was always working and you consider they will be working will stop working. So what is important, really be creative on your scenarios, and also be prepared in a way like at which point of time you consider it as a business continuity management, or at which point of time you consider it as like surviving mode, and then you have to make a decision, do you continue further, or you need to make a difficult decision to stop the shop. And in a crisis, sometimes, especially when it's severe, you don't have time for a lot of thinking, and you can't exclude it might be even emotional, because like your staff is afraid what's gonna happen, you yourself not pretty sure how it will be. So there should be very clear scenarios, how you make a decision, and how fast you make a decision, extremely important. From this perspective, I'm very proud. There have been 4 banking subsidiaries in Europe, which belongs to Russia. We are the only subsidiary which survived, which is now turned to be a local proper Swiss bank and back to business. And I consider that there are a few things which is important, and I will repeat it once again. Make sure that you don't do scenarios because of some small things. Really consider scenarios that things are changed a lot. And even if you believe this is something very unique, I can give you example now. We all expect energy crisis in Europe. How many of you have fought and have checked with your vendors what is the potential scenario about that cut of the electricity? Is your vendors, and let's not talk about like big companies like MIGROS, Hessel will tell it to us, but you just use your computer. How much time you can survive without the electricity? And if you do service system as a service and you do not host your system, does your provider has the capacity? And for example, they reply to you, it's only 4 hours. What you're gonna do after that? Have you considered that? It doesn't look like I'm just an IT company, or I'm just, I don't know, the designer shop, or I'm other industry. Energy crisis is not about me, but then it's about you. So you need to consider these type of things. You need to consider what you're gonna do if it happens, and you really need to prepare upfront. And I can give you a lot of other examples. And what we learned is that quite often then you're in a crisis and you're really struggling, there are not so many people around you who would like to help, because everyone think, okay, maybe it's a high risk. So try to consider what would be your leverage ratio and how can you do, and you really need to look to that solution. But believe me, that should be prepared upfront, not during the crisis. And really what I would recommend is, once again, look to your BCP or BCM, whatever you call it, and once again to reconsider, are you addressing all the issues? Are you addressing HR issues? Because then we think about the crisis. For example, now for COVID, everyone was looking that there is a pandemic and you lose your staff because they are very sick and they can't continue to work. How many of us consider that you lose the staff because they will say, okay, I believe this particular company is dangerous for me because it's an open space or whatever. I want to go to another industry, and et cetera, et cetera. I don't think not many of us were considering that. So the same here. So look everywhere, HR, IT, admin, finance and really try to prepare a scenario which is kind of out of the box thinking. And also try to consider some things which we don't like, because like as a finance people, we usually don't like to spend money, but don't underestimate insurance, because it might be a great help and support. Don't underestimate having like a second line of defense contract, and don't underestimate what you put in the contracts as your protection. I can tell you one, I know we may have not much time, so I'll try to finish. I think we've done a very good thing several years ago. We never expected we'll be facing what we've been facing now, and it's a big tragedy for all of us. But we've been sanctioned, and we put special clause in all our contracts about sanctions, and that saved us in some areas, because our vendors were forced to do certain things for us to help, right? So here the same. What you have in your contracts about the energy supply, what you have in your contracts about the other things. So look out of the box. Team should be prepared before the crisis. And it would be good if, because I know some companies have everything, but only on the paper. But it's really good to have a trial run. And I don't see it's a big damage for the business if you try to run some scenarios and to see how it really works. You would be surprised how many things looks nicely on the paper, but then 100 people are trying to execute them. You will realize that sending receiving issue exists, and then you need to twiddle it. So that would be my recommendation.
That's actually, those are very, very, very interesting points. Thank you so much for sharing those. I believe that you know, the essence of it is, you know, you have these BCM plans that are usually, you know, yearly due diligence exercise. You don't really overspend time or effort or money on them. But then if they really kick in, you better make sure that they work right, and that your operations also consider these severe outlier cases that might kind of suddenly become not so improbable. Is there, Pascal, thinking of the building industry, and you again, is there a particular learning for your planning of how you rolled out the recent crisis, and that you'd like to share?
I think Ekaterina brought up some very, very important points, right? You have to think big in these scenarios. You have to be bold. You have to find your black swans. That's really important. In our case, actually, a competitor of us was hit really badly. They caught a virus and they couldn't access their systems over weeks. And that inspired us to do our own scenario planning, which means no access to the systems. How do you run your business then? And it's quite an interesting exercise everyone can do. And you actually find ways of doing it, right? But you have to be prepared. That's one thing. The other thing I want to add, which also helped us during the crisis, is the plan is the plan. And if you are in a crisis, things tend to get messy and very messy, and it's not going according to your plan. The crisis doesn't care about your plan. But what's really important is to have a flexible organization, flat hierarchies, and good communication. And that is also something a capability organization has to build upfront. You can't start communicating in flat hierarchies very quickly. It doesn't mean that everybody gets to decide and to vote on the decisions, but you have to get honest and good feedback from the people that really know in that specific situation how to handle it.
You bring a very great point about the virus and, you know, resilience to digital attacks and cyber. This is something that we can see that companies, especially mid-sized companies that never experienced this before, thought, you know, this is never going to happen, and then when it does happen, they really have no plan. And this is, you know, this big, regardless of any of the ongoing economics and crisis and whatnot. And only after this happens, they scramble for, you know, setting up a system in place, a procedure, etc. This is, I think, a very, very critical and valid point, because it's a question of not, if, but rather when you're going to deal with some sort of a cyber story that you just have to deal with, right? There are different levels to defend against it, and lines of defense, so as you mentioned, is something that you can set up there as well.
And Ivo, let me add one thing. It's also important to have a look at the short-term liquidity, right? I mean, you can have a perfectly healthy business model. If a crisis hits and you run out of liquidity because you can't access your systems or whatsoever, then you're bust, and you don't want to be in that situation. So balancing liquidity and working capital is very, very difficult at the moment.
That's a very valid point. With respect to this, what can we as management accountants do to anticipate, manage, control these crises? What is within our sphere of influence, and also within the expectation on our leadership to do so, to be prepared? Maybe the question to Hessel.
Yeah, great question. And I want to also just mention on the black swan. I think the black swan is in many cases an excuse for not having done the mental exercise about everything that could go wrong. I mean, the World Health Organization has been warning for years about pandemics, and basically, we as a collective humanity have ignored that. Which also comes to the point that I don't think you cannot predict everything, because there's simply too many risks. And to Pascal's point, I think you just need to be prepared for that. And I think one thing is, as management accountants, what we can and should do is always have an external view. So we are all the time looking at what are our competitors doing, what is our competitive pricing, what's our market shares. There's a lot of data out there that you can be looking at. And maybe macroeconomic data we were looking at, on a regular basis, and you read it in the newspaper. But one of the first things I did this year is to build a dashboard to have all the macroeconomic key indicators in one dashboard, one for Switzerland and one for key European countries, to really see how things are developing. And some of those indicators are coming weekly, monthly, and some of them, for some reason come after many months, which our statistics agency need to have a look at. But, as management accountants, we need to get the external perspective and have our radar out there. What are the trends and what's happening? One thing as well, like Pascal said, is know your balance sheet. Make sure you have enough cash, but also know where you can stretch your balance sheet, right? Where do you have your levers in your inventory? There's a lot, in a lot of companies, there's a lot of room there to play around with that. To go a bit closer on the wind. If you're always closest to the wind, you'll have some problems when the crisis comes to get any leverage out of there. So it's a question, do you always want to be at the max, or do you want to have a little bit of resilience in there? The same accounts payable, receivable, the places where we know where to look.
And Hessel, let me add one thing there. What you also have to look at currently is how are your price rises developing from your suppliers, and are you able to hand on these increased prices to the customers? That's a big issue in the construction industry at the moment, and we really have to monitor it. Of course, you can sell a lot of volume at last year's prices, but that's going to be with a bad or negative margin. You can't allow for that. So we basically ramped up our reporting on purchasing as well as on the customer side, so that we really created an index on a customer article basis as a reference, that we really see, are we able to pass on all these price hikes that we are experiencing.
Right. So that brings us exactly to the point that we had a question here to the audience. Does your company incorporate dashboards with quantitative KPIs with respect to major macro variables and how they affect your customers, products, and growth? So the options are here, and let's see what the answers are. So the answers are really interesting. Half the respondents here in the audience say that they do have and they actively monitor such variables and macro variables. have say we got an analysis going on, but no dashboard, so it's kind of a one-off analysis. And and 5.3% is like no change in how we manage our way through economic cycles. Again, a shout out to the IT industry. We're doing fine. Maybe not, when you listen to the layoffs, and my sympathies to everyone affected globally by this in the major tech companies, but there are very few, as you see here in the respondents, industries that have been spared, these exercises. Maybe a question to Victoria. How do you believe, and what are your thoughts on how such macro variables should be monitored in a structured way to be kind of ahead of the curve when we see the rising effects of such macro variables on the company and the balance sheet and all the other interesting parameters?
I mean, as already said, monitoring the macro variables it's at least for us, and I guess for a lot of companies, I would say really important. And not only what's kind of happening now, also kind of monitor what are their predictions. So what is IMF saying? What is the World Bank saying? What is the ECB saying? What are they kind of predicting, or Moody's, so that you get a sense of what's coming our way and who is kind of saying what, and of course then also decide what is your prediction on the outlook, and what are those variables which are impacting you, because there are of course a lot of variables out there, and you have to kind of pick those who are important for your industry. And I guess what changed a little bit through the pandemic is especially as accountants, we are more triggered on a monthly rhythm. And what definitely changed that we are looking at the data more frequently, not always daily, but also weekly, and also have weekly discussions on what's happening out there. What are also the opportunities? How can we react on the crisis? We only talked about kind of the bad things which happened. Of course, they are the majority usually, but there are also opportunities out there which you have to take in mind, and also take them and do the investments where it's possible, where you have the chance. So I'm kind of surprised that only half of them said they have an actively monitored dashboard, because that's something which is really crucial, to have your data in place, your own data, also the external data, not only on the macro, but also look what are your competitors doing, what is the pricing out there for your products, and watch them closely to react. And of course, you have to adjust the KPIs constantly, depending on what's going on in the market. Of course, you have a static set of KPIs, which are your major ones, but then you have to be flexible. And I guess that's something which is also crucial, to be flexible, to be able to adjust quickly, and not kind of put a ticket to IT and then you get kind of the data, I don't know, half a year later. So here you really have to look at the processes to be able to set that up in a kind of quick way.
Right, and also maybe if you were to do this, you'd be monitoring, different the importance of the variables will change, right, over time, and you get a signal that something is picking up. You have to have the open mind to start kind of saying, okay, how is this going to affect us? What is the early prediction on this if it were to blow up, and that you could kind of stay ahead. But your point, or that one has to kind of look at the data and have this data assets set up in place to be able to do so is crucial.
If I may add to that, if I may add to that, I was in a webinar from IMA a few weeks ago, and there was a question about how many people are familiar with Power Query, which I know is a little bit of more the advanced level, and the answer was somewhere around 15%, and I was maybe a little bit shocked or disappointed, in the sense that all this data, you can so much data directly from the ECB, from the Swiss National Bank, from statistics agencies. Nowadays, it's super easy to link this either through Excel or make a direct interface, in Power BI. I think if you're in the 44.7%, think if you want to look into that, do you have those skills? If you don't have the skills, look into that. Because that's the future. Like Victoria is saying, that the data is there. It doesn't always have to be an IT solution. Sometimes it's, an afternoon or a night of work, and you can get a lot of great results. And this stuff can update itself overnight automatically, so then you don't have to do all the data crunching every day or every week. I think this is where we should be as management accountants.
Right. This plays into this upskilling data culture, and just even small incremental new skills will actually add up a lot in productivity and being able to stay ahead. The question was that I wanted to ask was more on the leadership, communication, and culture elements, because as we see, this pace of crisis overlapping is accelerating. You have to get better at the process of managing crisis. And one crisis differs from another one from the content, but maybe there's these setup and cultural and communication leadership aspects to it that you can focus on that'll allow you to just get better at this. What do you guys think is are interesting, applicable, communication and leadership elements that one can develop at a company? Maybe Ekaterina, coming to you for this question.
Well, people quite often saying that business is ahead of the organization, and I'm always saying that in that case, finance and controllers are the neck of organization, and then where the head will turn. So I believe that we really need to take a proactive position, and no one wants to hear the bad news, and people really are afraid of some bad things. But the good thing about us and our position, we may operate with the facts. Like Hessel rightly said, you can have your data almost online, overnight, and you can make it very simple. You just to provide people just with the fact patterns, and maybe adding some dynamics, and maybe adding some very simple statistics, how things will look like if you continue like you do. And at initial stage, you even may, because I know people sometimes might be afraid, maybe you just send some data without storytelling, without the information, but you really need to try to do that like this, and then start to make some discussion, to consider scenarios, what if. And I think we're here touching also quite important topic. For several years, people are debating what is the role of the finance and what is the role of the CFO, what is important, how we have to switch from the bookkeeper who just record what's happened to the strategic business partner. I think this crisis is a perfect opportunity for the finance to really take the role of what we say modern finance, because we're saying we should be business partner, sparring partner. We are now, because our management, our colleagues, they see that something is going, but my relationship managers, they talk to their clients. We don't have retail clients, we have corporate clients. They talk to them, and they bring some feedback from the clients. We have a commodity traders some of them are quite sophisticated, some of them are not. So you sometimes got the feeling, and then you have a finance person who is sitting near and saying, yes, I understand why the client is concerned about that, because if you look to the macro, this is how things considered to behave. And then you're actually saying, oh, by the way, there is some forward looking, and maybe you may give some comfort to the clients by offering some service as well. So from that standpoint of view, I believe it's a perfect opportunity for finance to start to really play the role as a strategic sparring partner, by using facts, by not talking about do I like it or I don't like, I believe or I don't believe, because this is impossible to debate. If I don't like something, you may tell whatever you want, but I still don't like it. So, but if you say, if you make a fact patterns, if you have your information flow, and here I also believe that the timing is crucial. And sometimes you need to switch to some daily, and in some areas even to intraday some data, because let's assume something happened in a week time, you produce a report, then another 3 days to make a decision, and then at the moment people make decision, things already changed. So from that standpoint of view, we had a client who is very exposed to the price on coal, and it took client to make a decision for 2 weeks because they've been waiting for the accountants to calculate something, then they've been waiting. At the end of the day, they decided to step into the transaction, but I can tell you the hit rate they got was 60%. So if they do it fast enough within 24 hours or 48 hours, they will save their money, but because it took them longer and the markets are very volatile. So that's why my recommendation would be really start to produce the data. And now we are in November, and most probably a lot of companies are either in the business planning cycle or revision of the financial modeling and the strategy cycle. And it's also a good opportunity if you haven't incorporated the macro indicators into your model, it's already time to include it, because I can tell you, we've observed, and Victoria, I think, will correct me if I'm wrong, whenever observe such high volatility in the exchange rate between euro and Swissy, or for example, dollar and euro and the dollar and Swissy. Of course, if you in one currency only, you're okay and you may ignore this. But in case you work, like being in Austria, you sell to Switzerland or you buy something from Switzerland, don't underestimate the impact you may have. So try to input these macro indicators to your model, understand how it's exposed, and then you still have a chance to consider if you want to bring some hedging strategies, which also accountants and controllers and the management accounts can help. Honestly speaking, the role of management accountants and controllers here is like this, it's enormous. I think we all know what to do. And if we've been shy, because usually finance people are not so extroverted, it's really perfect time, because now they want information, and you may use that in order to step in and to build up the proper steps or to the modern finance, then you really help business. And once again, I believe that neck actually moves the head, and you can really save the company, or you can bring some additional benefit to the company by doing this.
Those insights would be really helpful if we start thinking about, well, maybe we're not just managing survival and trying to scrap, how do we survive this, but rather use this as an opportunity to adapt, change, look for new business, and just, well, there's a saying, don't get a good crisis go to waste. What are some of the key, looking on the positive side, some of the key opportunities that you see going forward, and especially in line of what Ekaterina shared? Victoria, what do you think about this? Into the opportunities,
you mean on the leadership and how the organization is working. I guess what's crucial, and I mean, Ekaterina already mentioned quite a lot of that, is that companies are able to change, so that they are adapting, and that they introduce kind of a change in culture, so that the crisis is not hitting them too severe. Because if you can change and adapt quickly, then you will be able to react way faster. And that's something, especially with our company, we have constant change, and some hate it, some love it. So it's kind of, you have like the two things, but the two chapters. And but what we kind of saw then in the crisis, that it really helped us through the crisis, since we could react to a different environment quickly, react to external topics, also to internal topics quite immediately. And I guess that's something which everyone should kind of think about. How can you implement sort of a change in culture and be not afraid about change? I mean, it doesn't mean that your day-to-day business is changing all the time, but that you are able to adapt in a case of a crisis. I guess that is crucial. And what Ekaterina already mentioned is that's the good thing for the accountant. We can always argue with facts, so we can always provide data and tell sort of the facts, which they are not lying usually. And that's, of course, sometimes we are bringing bad news, but we shouldn't be shy about that. So we should kind of bring that to the table and start the discussion. The other thing, so that's the kind of facts and data part, where companies should kind of put a lot of effort in that. And what we have seen, we put together more closely kind of the finance department with the data warehouse and IT department. That helped us really a lot to build up the data platform we needed to be able to provide all the necessary data. And as you already said, the third topic is communication. Talk about the good and the bad things, and talk about them quickly and as frequent as necessary. If it's kind of so it's as I said, it's not only crucial to talk once a month about the P&L and the balance sheet. Also look at that on a weekly or even on a daily or interdaily basis. So I think those are the three main points I see, and I've learned which what was crucial throughout the crisis we already had, and like going into the still ongoing volatile times.
Yeah. So what I'm getting here from both of you is they mentioned is just basically, I guess, the need to invest in digital assets and on data assets. You mentioned data warehouse. Ekaterina mentioned also the intraday feed. So those are all capabilities that actually, from what you're saying, company should invest into, should maintain and expand these capabilities in order to have more time with it, in order to be able to react to this, in order to shorten the cycle from event happening to it being recorded or it being acted upon. So I guess I count this also as the positive side, right? So the crisis made us invest into these digital capabilities that otherwise during normal times you'd have to think about theoretical cases of why you'd need that, and suddenly it's like, okay, how many, what's our cash status at the branches like right now, right? Can you pull the report? Well, can you? I mean, so you need the digital assets for that. And true, maybe from many other companies, maybe from Hessel side, just on the opportunity side, what did you experience, or what do you think is kind of an opportunity to grab by doing this proper crisis management?
Yeah, it's interesting. So I like the point about the digitalization, right? And we have a lot of work done there already, and you see that some organizations or people who are not so much moving, they are now actually receive the case and are actually moving. I think in terms of opportunities in crisis management, so in terms of opportunities, so just from a business point of view, right, I think we see opportunities, just to put it a little bit in perspective. We see people down trading, which is good when you have a discount chain. We see, the oil price is not good for oil business. In the end, people are driving less and looking more at spending their energy. But we see in the positive side, people are trading to e-mobility, and we're also building an e-mobility network. So it's kind of yes, we see the challenge, but we react and we go after it. And we see that people look online and look for the best deal. And this is still, if you have a transparent web shop, this is a very favorable value proposition. Just in terms of finance, I think this is really a call to actions for us as finance professionals. In all of the financial organizations I've worked, I think finance is not agile. We're always addicted to our budgets. We all say that our budget is out of date in February. Why do we bother making budgets? I can't get my head around this question. It comes to what we're just discussing. On the one hand, we're trying to see, or we should see, maybe in some instances live, what is happening on a balance sheet, or what is happening live in a warehouse, and we try to estimate a budget 1.5 years in advance. Also in terms of processes, right? We're very good at adding documentation, policies. We're very bad at reducing that, and that helps us be more flexible when actually things happen, right? Maybe if we write the perfect policy, it will answer exactly the question we need to answer if crisis X or Y hits us. This is very likely we didn't exactly think of that and put it exactly to words. So it's an opportunity, but I think we really need to do much more within the finance organization in this respect. So we can be more agile and much more reactive what our customers or internal business partners need.
I just wanted to take a time to note your point of decommissioning policies. I think it's brilliant. Basically, the way you decommission systems, you just really need to rethink. Do we need, just rethink the process? Basically, the finance processes need streamlining as much as any other process that, the finance usually is quick to, criticize, to optimize. But the internal process in finance, to be keep it adapted in an agile way as well. Let's go to the
add and to reduce.
Right. That's the point, right? Just one additional question that I wanted to push to the audience as we move on. A little bit of time left to discuss sustainability. It's also one of the elements they wanted to bring in today's talk. Okay, there's a lot about crisis comes, we deal with it, make sure working capital, liquidity, systems, everything is working. But, how does this play together with what will otherwise, set out for sustainability, for ESG goals, right? Is this still relevant? And it should be relevant, but how relevant is it really? And more, the question that we put to the audience right now is, do you believe the current confluence of crisis, inflation, global political risk, a recession around the corner, is this going to facilitate or hinder, ongoing, sustainability initiatives, investments in sustainability, investments in the capabilities to measure those, to, be able to steer those also from the perspective of our businesses. I'm really interested in what the audience has to say, but in the meantime, let me ask Pascal again, sustainability and its relevance. You mentioned the ongoing climate conference in Egypt. What are your thoughts on this?
I think the topic is really big and finally has landed in industry. I think the banking industry has been discussing all this green finance stuff for a longer time, but now we really start feeling the pinch. So we see carbon taxes coming up on the cement sites, which increases our purchasing prices. We also see the banks making pressure. So if you negotiate with a bank, you really have to prove your sustainability efforts, else financing is going to be much harder to achieve. So we're in a very lucky position because we can prove we are a net positive company. So we produce or also sell external thermal insulation for buildings. And I'm very, very positive for that bit of the market to develop positively over the next years. But I also would like to add a bit on the previous discussion on flexibility and flexibility, the answer to a VUCA world. I think the role of accountants is also a bit of bringing in discipline to an organization. And that leads me to a question from the Q&A, which has been around for a couple of minutes already. What was the impact on cash flow forecast? And that is also something management accountants are excellent in doing, saying, okay, we need a weekly cash forecast that needs to be done. We need to have scenarios on that forecast if times get really difficult. And that is what we have done. So we have always been doing cash forecasts on a weekly basis. But in times of crisis, we really ramped that up and we did like 2 or 3 scenarios each week just to stress test our financial position. So I think it's a bit of both in accounting. You have to support flexibility at the right point, but you also have to be there and have the discipline to stick with the numbers, the facts, and the data.
Right. We're gonna actually wanted to go get the sustainability view from the panelists, and then we have 15 minutes to answer questions from the audience. There's quite I expect a lot more questions than that, dear audience. For the 15 minutes, so we only got 5 Q&A questions now. Now let me just take a moment to look at the results of the question we posed to the attendees. It seems that I was changing slightly, but yeah, the majority believes, 46% believes that we are, that this current confluence of crisis is actually going to facilitate more investments in sustainability. It's actually a view that I share as well. We'll hear the panelists' thoughts about it in a moment. But yeah, only 40%, slightly less than that, say no or less investments due to the ongoing crisis, and 12% believe there's going to be no effect. Probably then thinking about their individual industry, which I'm sure their industry where there's going to be little or no effect as well, 12%. So, going back to Hessel, what do you, how do you comment the kind of the sustainability issue? You mentioned, strengthening of local suppliers, reshoring, supply chains. How do you view this sustainability going forward affecting the businesses and and the broader and the finance function?
Yeah, so I think it's a super interesting moment in time. So we've had a time with very low interest rates. In my view, money was sloshing around, being crazy to find a place to invest, and there was a lot of completely useless investment in useless business models. And I'm very happy that interest rates go up. I might be very controversial here, but some of those businesses, business ideas need to go away. And I think the interesting thing is now when interest rates go up, which investments remain viable and actually survive. And those will be the good ones. And that's the same for sustainability, right? There's a lot of great ideas and plenty of good intentions. But in the end, you need to have a viable and sustainable financial business model as well to be sustainable. Just to take a consumer view as well, people have literally less money in their pocket. People are down trading. We see they're down trading. In Switzerland, the BO label is quite big, and retailers see that people buy less of the BO label. So in the short term, it's logical that there will be less investment simply because there's less demand. But I'm very hopeful that good ideas and good projects and good initiatives will remain, and I think it's absolutely necessary. It's also kind of down to what crisis will come next, right? I think we all have the environmental crisis very clear on our radar, on our focus. I cannot predict what's going to be on top of our mind in 5 years, and there's other big topics out there that are not much talked about. So being a little bit realistic there, but I'm really hopeful that so in short term I think it will be a bit less, but I'm hopeful that this stays a very important topic for everyone.
In terms of carbon taxation and measuring carbon emissions and footprints, impacts, maybe either Ekaterina or Victoria how do you believe, is this going to play out in the next time, over next year and beyond? And what are going to be the changes due to the current crisis, and how we deal with sustainability?
I mean,
well, I maybe start.
Quickly.
Okay, Victoria, you continue.
No, one point on the whole footprint, and I guess the biggest challenge we have as a bank is how we are measuring it and how can we get the data of our companies to be able to measure it, especially on the corporate side. So I think here it doesn't only need to have the regulations on the banking side, but also on the corporate side to provide the data and have also, I don't know, at least national pools where the data is kind of collected so that we can enter the data and see what is behind that and how are we doing then the investment and whom are we then lending the loans or not. So I guess that's one of the biggest challenges on the whole sustainability topic, to really measure the CO2 emissions of our clients and to get the data, because sometimes the customers don't even have the data themselves. And that's kind of the same for the retail side as well as on the corporate side as far as we see it. I mean, what of course we are also doing, we are measuring that from our side. So kind of what is our emission on our buildings. And I think here the pandemic kind of changed something with all the home office. So we still have sort of a shared desk concept. We reduced our office space where we then could also reduce our CO2 emission. Also with less traveling, so kind of the business travels were significant reduced, and Teams and all the different chatting platforms are working quite well, and we found a way to communicate quite good online, and we don't have to be so often on site. So I guess from a customer perspective, from the banking side, the data will be the crucial part to be able to do the right quantification then.
Great. So maybe to add also from my side, things like, you mentioned the push for digital initiatives, better understanding the customer, maybe, sustainability in terms of business sustainability, having, revised defensive hedging strategies in place, improved liquidity management, and understanding of that as well, would be something that, just as we ride out these crises, is going to help the businesses do that well. My take from what you're saying is that also, just measuring and knowing what the data tells you is being able to measure and quantify that is becoming increasingly important. So we go into the section now where we wanted to look at the Q&A, right? So we have 15 minutes left of this session. And looking at the Q&A, I guess the question by Danny Martins was part of the crisis team to create new cash flow forecasts when COVID hit, and are these continuously being refreshed while the war in Ukraine is going on? I guess Pascal answered a bit of this question. Does someone want to take and provide maybe a different view and answer to Danny Martins? So basically, did you refresh how quickly, and did you create new cash flow forecasts with COVID and then with Ukraine?
I suggest it's better to be comment not by bankers, because in case of bank, we monitor cash flow like intraday. But I think we may comment on that, but maybe it would be not so interested for the audience. It would be great to hear from the industry because they are not looking for their cash flow as online as bankers are doing.
Right. So then another question by Danny Martins, and please, in the meantime, dear audience, we said there's still 65 people left as attendees. Just post your questions now. Now is the time. So the question now is, how has the crisis impacted the way forecasting is done? Frequency, number of scenarios, different calculation methodology. I guess we touched on that early on. Does someone want to add something? Especially, I think
maybe
frequency.
I'll make a comment. And that's what I was saying. In our models, we have macro indicators which we incorporated. And at the moment the macro is changing, the model is changing itself. So from that perspective, then Hessel was saying, what for we're doing the budget, if 1 month after our budget numbers has nothing to do. So you have a model. I mean, it's not a perfect adjusting, we'll understand that, but at least it gives you certain things. So from that perspective, I think that's should be helpful. And in our case, we always have scenarios. I think it was classical approach like conservative, basic, positive. We try to increase the number of scenarios. At some point of time, I think we have like around 10. It's impossible to maintain them. Honestly speaking, you spend much more time on them. But some kind of optionality, I think you better have in your models. And forecast, we update, like for us, it's normal weekly. Just it's not we spend time, right? It's kind of adjustment based on you have your current, and you may do some backward calculations as well, like how should you amend your speed to reach some goals which you have.
So adjusting, but that's actually quite surprising, Katerina. It means to me that sounds fairly advanced, right? As a benchmark, if you are updating it, if you're just able to update it, so frequently. Yeah, that actually sounds very interesting.
But we're still missing proper digitalization solution. But I want to have less manpower involved into that, so it's still to-do list.
Automation helps, but it's not free, right? So the next question is actually great. I will comment on that, allow myself to go. Power Query rules, yes, it does. So does many other tools that you could have, like Tableau or one of these open source tools. And actually anything really that'll help you get a better sense of your data rules, but Power Query especially rules. So marking that as answered, thank you so much. Next question, for the banking industry, how the developed fintech new technologies contribute to your top line in times of economic challenges? So, some of the new technologies or fintechs that you integrated, how did they contribute to your top line in these times? Maybe Victoria, if you could answer, if you have like an interesting answer for this.
I mean, it's kind of hard to say since we use a lot of different technology for like a small parts of our processes. So it's really hard to then say, okay, that's X, Y, Z to our top line. So it's a contributor, I would say, also to the top line, but it's hard to put a figure at the end. But yeah, looking at kind of online product you have, that's definitely something which is increasing. And as I already said, the customer behavior changed throughout the pandemic quite quickly, which we didn't manage to change throughout the last 10 years, happened sort of overnight in COVID. And that really helps to push kind of online processes further on the payment side, but also on the product opening side and on the product cycle side. So that's definitely already contributing something to the top line. But it's still hard to kind of put numbers towards that, especially for a big retail bank. It's easier for a fintech bank like N26 or something like that.
Thank you.
I hope
Thank
I could
you.
answer the question.
No, but just to add on your answer, yeah, it is sometimes hard to quantify, but I would still advise colleagues who would wish to have finance approve those investments to think hard about providing a number that would, in terms of top line, and then maybe revisit it. But oftentimes you just wouldn't, know right off the bat, if we were to get this technology or that, what the effect in actual terms would that have. Moving on to the next question, when do you expect the current cycle of monetary tightening to peak to an end? Maybe Hessel or someone else who wants to answer this. When are we peaking out?
I'm not an economist, so I would be very cautious to forecast this. But my understanding from what I get from the news is these cycles of monetary tightening actually take a longer time. I think in the past it took at least 1 or 2 years to tame inflation. So if that's a guide, it will still take a little while. If we would know, it would be great because we can adjust our investments accordingly. We'll be very rich. But maybe someone else knows. And, just tell me and not everyone.
No one knows, and if you look to the Bloomberg consensus, some analysts, it looks like it's a 1 year hike and then it goes down. So I don't believe into that. But I think there is, we'll understand that there is a big influence on the war and how it will be. So from that perspective, of course, the sooner things kind of normalized, it would be better. But I agree, Hessel, with you. In spite of that, I think we need to wait for another year or two, because from what we can see, we have this kind of piqué now, because the rates are increased, inflation is not stopped, they increase the rate further, inflation is not stopped, and no one is thinking on the consequences. For example, for the businesses, the higher rates, the less investments, and then you know what would be at the end. So that how I will add here. So I don't believe into Bloomberg consensus. I'm more on the Hessel side, roughly 2 years. But we can make a bet, and then we'll check in 2 years' time, and somebody will have a bottle of champagne.
Yeah, I also to share my opinion on this. Maybe I think that that they're likely to go far more and far longer to achieve the stabilization goal than people would believe, right? So I think they would but again, it's opinion against the consensus against anyone. So the 7th question from Maciej Yamka: at today's interest rate of U.S. economy showed maybe rate of growth of the U.S. economy showed a huge decrease. What do you think of that event? And how do you incorporate it into the economic decision, into your future economic decisions in respect to overall risk? I think it's a good question in terms of, you look at this event today, and do you think it's a signal for something that you want to incorporate, or just to get this right, I think it's about growth and not about interest rate, or the interest rate of the U.S. economy showed a huge decrease.
I just checked that the inflation was lower than past month, right?
Inflation was okay. Inflation decreased. Okay.
So if the
interest rates decreased as well.
So from a retailer view, we keep a close watch, right? But I think, as a retailer, let's say a bit more traditional business and not in the financial market, I don't think like 1 day changes are gonna completely change the situation. So it's in the end about how people respond over longer periods of time, and we'll adjust accordingly. But I don't know if 1 day's data is going to change the situation drastically.
Thanks. Victoria, you were about to say something on this.
Yeah, I guess that's the challenge we currently have in the volatile environment. It's like changing constantly, and you could kind of, especially when you're now in the budgeting circle, you could kind of update your macros every day, and you have to kind of I guess you have to watch it closely, and if you kind of see that the trend is going on, you should incorporate it. And it's also depending, is that a factor which is crucial for your business? Then you have to react to the development. So yeah, you have to kind of be aware what's crucial, what's not crucial, and do I have to react immediately, or should I kind of watch it for a couple of days and then react?
Thanks. So please, dear audience, you still have 5 minutes to ask more questions. Please put more questions. In the meantime, I will ask a question from myself to the panelists. What are other interesting macro indicators that you think are usable, right? I mean, everyone's looking at deflation and, interest rate, but, things like global trade, shipping, interesting, like what are these non-obvious indicators that you believe are relevant and, companies should be on the watch out for as early indicators, and maybe even incorporate them into their planning going forward?
Definitely commodity prices. The question is, what is the correlation and what is the impact? Because the commodities is part of the supplies which is received, so I consider that should be added. Which type of commodity depends on the business, but people should pick up what you're looking for. Somebody will look for soft commodities like grain and corn. Somebody will look for metals like aluminium or something else. That's definitely should be added. Then I think important thing is the GDP. I think it's too generous in some industry. I mean, it works for the big one, but for the small one, I think they need to consider some other elements. And for some industries, the population growth or like the number of this type of information, trading activity, if you're involved into the trading, so the volumes of the import and export. But this is very, very specific. I don't think we can come with a standard set of the things. Of course, the inflation and the rate is something obvious, but exactly if you would be able to pick up 2, 3, I don't think you need thousands, which is very specific for your industry, that should help a lot. And sometimes it might be...
Yeah, Pascal, please go ahead.
Okay, I would add gas prices to the list because all of Germany, Austria, Switzerland, the industries are really built and dependent on cheap gas, and the pipelines are broken. We don't know how the situation is going to develop, and that's going to put huge pressure on us next winter. I'm not sure if all the gas storage will be filled up as nicely as they are now next year. So that is something I'm looking at.
Thank you.
The
Thank
challenge
you so
is
much.
Switzerland doesn't have any gas storage. We rely on our kind neighbors. So let's see how that goes if there's not enough. One interesting indicator I've been looking at, which is a bit of challenge. So GDP in Switzerland is published like 2 months after the quarter, which is completely useless. The Swiss government is publishing some estimate of GDP, a weekly estimate, but it's publishing it only monthly, which is also completely useless. And then I found something which is called monitoring consumption. I don't know if you can put a link somewhere, which gives daily not live, but daily payment transactions from one of the payment providers in Switzerland. So on the one hand, this is super interesting, and I try to track this and follow this. On the other hand, you also then get a kind of an overflow of information, and what do you really get from this indicator. So there's a lot of interesting data out there, but the more data you get, the more careful you need to get what it's really telling you. No,
I was on
you're on
mute,
mute now.
so I was just made the classic mistake. Again, thank you so much, everyone. We have 1 minute left, so I will wrap this up with just one sentence from everyone. Thanks so much to each and every one of you for this amazing discussion, and to our audience for participation. So let's start with one wrap-up sentence with Hessel, with you.
One thing I want to give you, if the economy changes, be prepared. If you haven't taken the CMA yet, get ready to upskill and get the CMA. If you have the CMA, go to the next level and do the CSCA.
Thank you. Pascal?
Well, expect the unexpected and leverage your skills as a management accountant. I think accountants have a lot to contribute, we've seen today, and use your skills.
Thank you. Victoria?
Yeah, a lot is already said. So I guess data and communication is crucial. And both accountants or management accountants, you have everything, use it and bring it in place.
Thank you. Ekaterina?
Well, crisis is not only a threat, but as an opportunity. So take it as an opportunity and use all the hints and tips which my colleagues gave to you, and it would be your key to success.
Thanks so much. And maybe one sentence from me, and have a look at your data and make sure it's of good quality. Thanks everyone so much. Thanks to the Swiss chapter for co-organizing this, and to our wonderful panelists. And I hope to see you in one of our future IMA events next time. Thanks. Bye.
Bye, everyone.